2014 hold in store for the foreign exchange markets. Hi, my name is Justin Pugsley. I'm from MahiFX, and I'm here to talk through some of the likely big themes for 2014. A very big one is likely to be the focus on economic growth and away from quantitative easing, especially in the US. This in turn is likely to drive interest rate differentials between the various currency blocks, which in turn is likely to be a driver for foreign exchange markets. Now, this return to more normal conditions does come with some caveats, which I'll address towards the end of this video. But for the time being, at least, if the US economy does prove sustainable, it is very likely to lead to the US Federal Reserve even raising interest rates towards the end of 2014 and the beginning of 2015. Basically, in terms of the economic and interest rate cycle, the US is quite far ahead of the Eurozone and Japan. Therefore, that is likely to be very bullish for the US dollar. Now, looking at Euro US, a better global environment driven by US recovery is likely to create a very favourable backdrop for the Eurozone, and also given the fact that peripheral Eurozone economies are beginning to stabilise. I mean, this is very good news. Growth basically removes worries of a Euro breakup. However, the Eurozone is still a long way behind the US in terms of growth. That is likely to see the European Central Bank continuing to pursue a very easy monetary policy, whilst the US Federal Reserve is potentially looking to wind down its QE program and possibly even tighten rates at the end of the year. So, and also you've got to bear in mind that the euro actually had a very good year in 2013, much to the surprise of a number of economists and commentators. This suggests that further gains against the US dollar are likely to be pretty limited. So the pair will probably trade in a range of 132 to 140 for 2014. Now, by contrast, the Bank of Japan is likely to be the central bank among the majors pursuing the most aggressive monetary policy, and this will weigh on the Japanese yen. A more risk-friendly environment is also likely to see Japanese investors go abroad to pursue better yield opportunities and better growth opportunities in other markets, which that means selling yen to buy assets in other currencies. Throw in the carry trade, and 2014 could really see, the yen continuing to make new lows. So the pair could trade in, so dollar yen could trade in a range of 103 to 110. Now, compared with the Eurozone and Japan, the UK appears to be a lot more synchronized with events in the US in terms of the economy. The UK economy is making a strong recovery, as is its real estate market, and the other interesting fact is that growth actually appears to be broadening now. So it's not just happening in London and the South East. Also, for the first time in 5 years, consumers may see a rise in their incomes in net terms, i.e. versus inflation. And this will be important to sustain the recovery. And if the Eurozone actually grows more next year, then that could actually help chip away at the UK's very large current account deficit. And also with growth, there are warnings of potential capacity bottlenecks in the UK economy. That could be an inflationary event. So much like the US, the UK could be looking to tighten or raise interest rates the end of 2014, beginning of 2015. The range on cable, anywhere between 160 to 167 as a likelihood. Now, gold has had a really bad year, and that bear market could well go on until the summer of 2014. The summer tends to be a turning point for gold. It could happen again in 2014, quite likely to test the psychologically important level of $1,000 a troy ounce. Basically, there's been massive ETF liquidation. Institutional investors have been selling out of gold they see that the economic risks are much lower, they see a recovery, the Federal Reserve is tapering its quantitative easing program, and inflationary pressures are generally benign, so why hold gold? However, whilst they're selling, Asian investors, particularly Chinese ones, have seen this sell off as a great opportunity to get gold on the cheap. So they've been buying aggressively. And also with the hot money coming out of the yellow metal, and if the buying from Asia continues, the market will eventually bottom out, and we could start to see a recovery in gold in the second half. So very likely to trade down to $1,000, maybe touch 950, and will probably recover to about $1,200 towards the end of the year. Now, just coming back to the issue that I mentioned earlier, which could blight prospects for 2014, it's worth bearing in mind that Western economies, along with a number of emerging ones such as China, are turning Japanese. What I mean by that is that they all have rapidly aging populations. I mean, this is one of the factors that's held Japanese growth back for so many years. Basically, as older people are less likely to trade up to more expensive homes, less likely to trade up to more expensive cars. So therefore, that is an impact on the economy. The US economy is 70% driven by consumer demand. Western economies such as the UK and Japan, it's about 60%. So it's a very big influence. So that could be a drag on the economy in 2014. But having said that, demographics are very slow-moving trends, and offsetting that is the fact that banks are in better shape. There's more confidence, which could release some pent-up demand from people who were nervous about spending in previous years. So 2014 could still be a good year, but those demographic factors are likely to be felt quite strongly at some point. So on that note, I'd like to wish everyone a very prosperous 2014, very good trading, forex trading, and from the MyFX team. And thank you so much for watching.